You're watching BNN Bloomberg. I'm John Ehrlichman. We've highlighted how choppy the markets have been over the last couple of months. That wild ride has created a pretty busy stretch for the parent company, the TMX Group. We've been reporting all morning on the company's latest quarterly results. John McKenzie is the interim CEO and the chief financial officer, and John joins us now to talk a little bit more about their latest results. John, thanks very much for being with us.
Well, really appreciate you having us. Thank you.
Let's just talk about the historical context of what we have been going through. I mean, in your basically 2-decade career with this business, can you remember any period that was so uncertain, so choppy?
Certainly this one has been the one that's been the most extreme, and we've definitely had periods of downturn and disruption before. You've talked about the 2008 financial challenge. I was also there in 2000 when the dot-com bubble burst. So we have seen these waves of activity that create disruptions in the marketplace. And while this one has been more volatile and a little deeper, the patterns are still emerging the same way in terms of how it affects the overall business and the community and the street that we operate in. A lot of volatility in trading activity, some challenging for environment for companies to raise money, but often that gets followed with companies coming back to market to recapitalize their balance sheets, and that's what we'll look forward to in the future.
And I do want to talk a little bit more about that theme. Before we do, just to talk about the sort of the two sides of the volatility. On the one hand, and we've been mentioning this morning, the fact that the business was able to benefit from some of those extremes in the market. But you joined us in late February after you guys were dealing with a technical snafu that led to a market outage. How have you felt in these last few weeks about the system behind trading and your comfort level to be ready to deal with any more uncertainty that might come in any of the choppy trading days?
Yeah, that's a great question. And when I took on the interim leadership in January, I certainly couldn't envision that these were the scenarios that we'd be working through at this time. So have enjoyed the challenge and real kudos to our team for stepping up through all these different events. You referenced right there the challenge that we had on Feb 27th. And that was really coming into the beginning of this crisis in terms of how it was affecting the marketplaces. And what we saw on Feb 27th was a surge in activity. And for us, that meant messaging. So orders and sells and cancels, things like that. Messaging levels that we'd never seen before. And we build out our systems and we test them for capacity beyond previous peaks. So multiples of the previous peaks we'd seen in the market. And what we had in February was going from a market that had been seeing about 70 million messages a day come in to suddenly we were at 170 million by midday when we had that challenge. But what really drove the challenge was the amount of messages that were coming in per second. So we had seen over 10,000 messages a second across the systems. We'd never seen that before. We'd never seen anything close. And it created a backlog in our messaging capacity that supports the whole marketplace. We never want to be down. We never want to be closed. And certainly we took that very seriously, the impact that had on our clients. So our team was able to very quickly triage that, get new capacity in place that night, and be open for business the next day. And if you look at that as the precursor to what came into March, the activity levels that we managed through March were 2x what we saw on that February 27th day. So we've been handling much larger volume, much more volatility without any challenges. And we're going to continue to invest in the system. I want to make sure that's really clear. We learned a lot through this. We've got an investment plan throughout the later this year in terms of where we're going to add more hardware, more capacity, how we're going to look at engineering things differently so that there isn't bottlenecks in the system, things like that. So there's a lot of learnings that we'll take forward. But we've got a tremendous amount of confidence that we can handle whatever the market throws at us. And I want to raise with you, John, it's not just trading systems. We've got other important systems that backstop the Canadian market, like our clearing systems. They are more legacy. They operate on legacy technology, like mainframe technology. That's another one that's going to need updating and modernizing. We're in a modernization process, and this just made it even more important to do it.
Okay, so that's some helpful context. I do want to come back to that storyline of companies in need of capital. And I ask because yesterday, obviously, we saw the federal government roll out a new package or plan this time really focused on bigger businesses, those that have at least, let's say, 300 million in revenue. And there are a lot of those companies that obviously trade on your exchange. Did the government talk to you guys at all? Did you coordinate at all on where some of the challenges are in raising capital right now? Because it sounds like you're saying there still is an ability for a lot of companies to go to the market and to raise the capital they need in this environment.
Yeah, we continue to be in active dialogues with governments at both levels, so at the provincial levels and the federal levels, about what we can do to help companies raise money. And there are some action steps you'll have seen that we've taken already on our own in terms of providing relief to issuers in terms of when they need to file their statements, when they need to do AGMs, the minimum share price that they can do a capital raise at. So we've already put some of those measures in place. And then over the years, we've also made a number of recommendations on burden reduction to make it even easier for companies. So this would be streamlining prospectus processes, streamlining disclosure to use electronic tools like we're all using now. So it's quite fitting in that. So those are conversations that are ongoing. We'd like to see those accelerated. Then when it comes to specific areas around relief, we have been advocating both at the provincial and the federal level. So earlier on in the relief programs, when the feds were looking at wage subsidy, we got involved in that dialogue to ensure that wage subsidy programs were available to a broad base of companies and not just private companies, as in the earlier iteration, so that the public companies that are raising money through these markets could benefit from it as well. We haven't been active in the dialogue around the new program that's just come out, but I do see it as an area where we can provide some help. I mean, you would have seen that the government is looking for companies to up their game on sustainable disclosure. And that's an area where we're doing a lot of training and developing with our companies in terms of how to up their disclosure around ESG. We actually just launched a program in March to help with ESG disclosure for companies, and I think that'll help with what they're trying to do with activating that program.
All right, so we'll watch what happens on that front. Just in terms of like, if we think about your business, and you've told us before, and the company has made it clear that going around the world and making a case, essentially for investing in Canada, going out, bringing capital to this country, is a core part of what you do. I'm just curious what those conversations have been like over the last 2 months. You know, you got borders that are closed, you got a lot of limitations on, you know, how far around the world people are looking right now. How has that affected those conversations?
Well, the number one challenge you highlight right in there is we're not traveling anywhere. So anything that we used to do face-to-face from a business development standpoint is all being done virtually. And we've got folks that would like to get back on the ground again in terms of some of the marketplaces we operate in. Now, in some of the places that we've identified that are really good candidates for raising capital in our marketplaces, we do have folks on the ground. So we've got folks on the ground in the U.S. We've got folks on the ground in California, in Chicago, in New York. We've got folks on the ground in Israel. We've had a number of new listings coming out of Israel. We've been putting people into South America. That's a new area that we're pushing into. And we're looking at how we engage and get on the ground in Australia as well, because that tends to be a market that has good both resource companies and technology companies that could finance in Canada. So clearly, like everything else, we've had to take a step backwards in terms of how active we can be right now because we can't travel, but also because, like a lot of the industry, the clients are often just engaged in how they keep their operations going right now, and less so about how they do that next level of business development. So that's a reality that we're working with, but it doesn't change our long-term game plan at all in terms of continuing to push out in those regions. And I think in the future, you'll continue to see South America and Australia and Asia be areas where we're more active in looking for new listings.